Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Okay, so couldn't hear the sound. I'm going to actually run this thing in the beginning. I know there's some box you can check inside Zoom. I don't know where the hell it is. You can actually hear the sound from this system as well, but that's our new super fast and completely read quite quickly by yours truly disclaimer. But forget about that crap. Let's move into the markets here. So coming up, thoughts on this week. So we have, unless there is a coup in DC, we have essentially a new administration to be sworn in on January 20th. I know half of you out there are pissed, so be it. But we must embrace and look forward to any potential changes the new administration would bring about. And a lot of that is going to be dependent upon what types of policy, if any, that is counter capitalistic is brought forth. I don't know. I have no speculations. It's going to depend upon a lot of stuff. Do keep in mind there are a few in the that have different opinions and all this stuff. And we're just gonna have to wait and see. So what does this mean for the US dollar, right? So what does this mean for any types of changes that are coming about in the Federal Reserve? So what we do know is that Jerome Powell has signaled in no uncertain terms from his kitchen that the Federal Reserve is open to keeping interest rates at their current levels. Keep in mind, are you guys not getting any volume coming through? Let's double check this. No microphone? I can hear you now? Okay. All right. Let's double check. Got all kinds of crazy things going on here. Got a spot one of these things too. This thing's absolutely the bomb. As you guys may have seen this stuff. This is a studio quality mic. If I could figure out how to get the darn thing hooked up, I'm actually going to run for him, so we'll be able to shoot. It's a Rode microphone. It's actually a really good microphone. If I can figure out how to hook the damn thing up, it'd be great. In any case, back to the news. So here we are, forexfactory.com. I have filtered out all of the events that don't matter. Just came up with the red folder events here. So next week, change of administration, as I mentioned, we also have monetary policy statements coming out from CAD. They'll probably be echoing the same thing the Federal Reserve has done. And obviously Biden himself is probably going to speak tentatively. I have no idea what he's going to say. No notes have been released. I know that Wednesday could certainly be a big change day. So ideally, I'm probably not going to be trading this day. Doesn't mean you shouldn't. It just means that there's too many unknowns for me to mess around with. And quite frankly, I'm out of the office seeing clients anyway. So it's probably a good thing. So I can't get my greasy palms and pushing too many trade buttons. We'll probably wind up with a losing day. So, but one of the beauties of some of our software is that, especially with Arrow guys, that the train has certainly been leaving the station with a mass load of subscribers on board. Including yours truly. So it really is a good sort of take control of your own destiny and risk for that matter, which is relevant to our primary theme here on Saturday. So looking at Thursday, monetary policy statements coming out of the Euro, obviously a press conference. Keep in mind, anytime I talk about these types of news stories, any kind of press conference, regardless of where it's being broadcast from, if it's open to Q&A, it brings more risk into the situation, okay? So those not looking to trade or those having profited Monday and Tuesday, don't press your luck the rest of this week because I'm not really sure what's going to happen as far as volatility, okay? So one thing of note for you gold traders, and I've been talking a lot about both the golden cross and the death cross Essentially, this is nothing more than a couple or a group of moving averages, in this case, the 20 and 200 SMA, crossing over each other, which took place towards the end. Now, this is the daily chart of gold versus the US dollar. Just be on alert for that. We possibly could see some further extensions lower in gold, but it's going to depend. Everything is going to depend upon our favorite US dollar. So let's go to the charts. DXY. We always start our analysis with that daily chart. And in this particular case, support and resistance lines are hats off, by the way, to our particular indicators that Dasan has very kindly developed for us here in the Trading View community. Has kept us in a pretty tight range here on the dollar. Let's take a closer look at this. So we have two areas of what I like to call confluence. It's really just nothing more than an amalgamation of things showing up in a particular area, right? We could overlay 16 other different pieces of technical analysis to probably come up with a whole bunch of other areas of confluence. But just to keep it simple, within a support and resistance range, we've been bouncing with the US dollar, and with our moving average line here coming up against, it could potentially bring about a reversal back down within this range. What does that mean for your trading? That means if we reject this area and head back down, which is very, very normal to do while the markets, in this particular case, the dollar is balancing out here at the bottom. Now, whether we continue to travel further lower is going to depend upon whether stimulus package number 3 actually comes out. And I have no idea. Some states, including us, have surprisingly enough begin to open, but we still have enough cases and not enough vaccines distributed, I think, to have a complete opening of everything. So thus we are still stuck with our kids and homeschooling, which I'm not a fan of. So but looking inside this here, I think we probably have enough resistance to sort of push us back down into this area. If you look at the opposite of that, it's the US dollar. Again, daily chart. It's probably going to hold this area. Could be wrong, but if it does hold this area and starts to move back up, we're probably going to travel all the way back up to the top of the range, just like the complete inverse of the complete directly correlated to US dollars move. That just means to me that I'm much more interested in accepting trades that are being shot out to me via any MAV versions of the software that I run, going long the US dollar, right? Than fighting the train of going short. So GBP, let's take a look as well. Again, real solid area up here, right under the 3678 area. Has been holding this exceptionally well. Notice it's come back down. I would expect we probably spend some time over the next week bouncing around in here, and that is really only unless any of our policymakers, central bankers around the world, don't say anything that would surprise the markets. I mean, one's always on high alert whenever you're manually trading for news, right? You really don't, in my opinion, don't want to be taking trades within about an hour before or a couple hours after, depending on the types of markets you're trading, especially if it's a big story or any type of press conference or any kind of Q&A surrounding any central banker or Fed governor speaking. That's just my own personal opinion. Yes, you could do well during these periods of time, but historically during news of any major magnitude or red folder nature, you usually have a lot lower win rates on whatever types of trades you take. So just keep that in mind as well. So Euro JPY, and I notice we've broken from a couple of the other charts, and I think that's just because if you look at Euro US dollar, it's obviously weakness related to the strength of the US dollar moving up, albeit slight strength, traveling essentially almost perfectly a buck higher than where it was lower. You would expect weakness in Euro JPY to play on the opposite side of that, but we're still holding here. That's a nice little potential area for a reversal to take place, thus moving higher. Thus, what do I want to do? Be more adverse I should say I'd be more interested in accepting trades that bounce off of this level, essentially long Euro JPY higher as a potentially better win rate. USD JPY still traveling inside this whole downtrend. It's been acting quite perfectly relative to support and resistance levels. You see they keep building themselves going forward. So I would expect us to continue in there as well. USD CAD. And by the way, guys, while I'm talking about all this, the Q&A window is open. Please use the Q&A window, not the chat window, to go through a lot of this as well. I am going to, once I'm finished with these charts, anybody that wants to take off, my analysis is done for the day. But if you guys have additional questions going forward, yes, the developers are trading this week, although I probably say that every week, right? But looking at USD CAD, again, lifted right off a big support level down here, 26.27. Okay, so just keep that in mind on the downside. I do get a lot of questions about tradingview.com. The software is really cheap to have, guys. I mean, honestly, you can have a pro version of the software between $15 and $20 a month. And you can copy most of what I have here. And it's just very simple analysis to start to get in the habit of doing. AUD CAD, please. Let's take a look. That was my request. Okay, AUD CAD. Let me switch to a weekly chart here. The problem with AUD CAD is it's almost like you need to start the analysis of any relationship between the Australian dollar and the US dollar first, and then and then the USD CAD second, before you move into the analysis of this chart, so you can understand how the other two sides of these opposing pairs or other currencies are, right? So it seems like a convoluted way to explain it, but I always want to know what's pushing the US dollar in relation to the Australian, or what's pushing the US dollar in relation to the Canadian before I move into this chart. But just offhand, I don't really take too much look at this. I would say monthly chart here. If we were to continue the strength in Aussie, probably going to be sending up towards essentially par between these two currencies. Seems like that would probably be, all things considered, so Australia begins to thaw out from COVID. The strength I would expect to continue. But it's a tough call on something like this. Just looks like to me, if we could clear this area, we should probably be heading towards par. Euro AUD. Keep in mind with this one, guys, this is going to be almost a pin action type of situation, because it's going to be 100% dominated by what the Euro US dollar does first. But as any weakness you saw here, it's like we had a nice whipsaw. What else? So we've got both the green and the blue moving average lines and support down here as well. I think that probably somewhere in the area of 54.88-ish, all the way down to, should hold this, but this analysis could just not be worth a crap, you guys, if the US dollar just starts to head in some crazy direction. I mean, it's almost like you need to just take a glance at all these charts, right? But then go back to the US dollar in like almost every case, right? Just start with, as I often refer to the term pin action, when you're looking at an entire set in a bowling alley of pins, right now the US dollar is pin number one, right? And then as you get back to crosses and exotics and, sticking to the majors of the first set of pins behind pin number one. So you sort of have to think about from a risk standpoint, when one pin drops, it's going to take its reaction to others before it actually makes it to the back of the pack, right? So you sort of start your analysis from there forward. I do that a lot. Same thing could be said in commodity analysis as well. Anything related to metals, you have to look at the US dollar as an example. Start with gold next, maybe move to silver. You can get a little more exotic with a platinum or palladium type analysis. But looking at, all right, I'm stopping me jabber here. Let's go to euros. All right, so we did that. Sean asks, is there any correlation between the Dow Jones Industrial Average and USD? So just so we understand, the Dow Jones Industrial Average, which is often viewed on the major networks, really is only a compilation of 30 companies. It's weighted by size. It's an inefficient index, even though it's been around since the 20s. The S&P 500, in terms of an analysis, which we need to move back to the daily chart on, by the way, this is the whole last year. It's 500 companies weighted by capitalization. It's a much more effective benchmark or index, if you will, in terms of measuring the performance of US equities by far over the Dow Jones. Okay. So the question is asked, will any of these indexes affected by the US dollar? Well, these indexes are affected by the value of commodities, and they're also affected by the flow of GDP in and out of the 500 US companies, right? So if the dollar is weaker versus stronger, it has an opposing effect on. And honestly, if you guys go to my Telegram channel, I have the Forex cheat sheet that I posted. And really, a lot of questions I get asked about macro and microeconomics can be answered with that cheat sheet. It's actually a really good piece that explains money flow versus GDP relative to any. And I think it's a good start. I mean, honestly, I think everybody coming out of college these days or university should have a degree in whatever they want, but it should always have a component of macroeconomics in it, because it really helps in explaining lots of different stuff. So next question. With all the money Biden has announced to help the economy through the pandemic, adding enormous amounts to the already huge debt, what kind of effect would you, with all of my expertise, not sure about the expertise part, by the way, but thank you, see that on the strength of the dollar? So the market is a discounting mechanism, meaning that it is pricing in future movements in whatever, okay? So if we're going to take on higher levels of debt, essentially much more trillions than we've already buried ourselves in here in the US, the question has to be asked, has the market priced it in? Has it had a discounting effect or pricing in effect to the current marketplace? The answer is, I think, a little bit. But if we see that another big package is rolling through the House and the Senate, maybe on its way to Biden's desk, that certainly could have a devaluing effect to the dollar. Dollar starts crashing through the lows. We're probably headed to that 87, 85 area I've talked about ad nauseum over the course of the last 6 months. So that's how I would view its movements relative to the market. The weaker the dollar is, certainly affects imports and exports to the country, right? And opposing companies' imports and export prices are based upon changes in the value of the dollar if they're bringing goods and services into the U.S. Obviously, many companies have a hedging desk that does some currency trading to offset movements in currency, so it is easier to get product in or out of the country depending upon it. But the decline of the dollar has varying degrees of effects on equities, both this country and in Europe as well. Sometimes they're very correlated. The bottom line is that in the equity markets, the only thing that really matters at the end of the day, even though we're looking quite bubblish at this point, is corporations' ability to raise profits consistently. That's what prices in higher levels in equities valuation. If I haven't already lost you on that, I can certainly go over that again. So I would expect if we bring another package through, that it will weaken the dollar is really the bottom line. And you know what? Keep the questions coming, guys. Don't worry if these are too basic. So it's Steve, this is going to sound really basic. Can you explain when we see the red and green candles, red down, green up, how should we interpret the ups and downs of relationship to profit or loss we see? So let me just go to the D. Actually, you know what? Let me just go to the Euro USD for this one. I try not to get too into price action discussions in these groups because I'm going to lose a lot of people trying to answer this question because it is difficult. The only thing I think that is important in candlesticks is recognizing very important patterns that have always shown themselves to be something that plays out, right? And I've posted in my Telegram channel, I'm not going to go through it, but I've posted a huge primer on the most important candlestick patterns that play out. Double tops, right? Triple bottoms, inverse head and shoulders, all these important ones will start to play out as we get past some of the understandings of basic price action inside the candles. You know, I think we've all got a pretty good handle on how support and resistance works, and the moving averages obviously in relation to that. You know, I've layered in a little bit of market profile, which I'm not talking too much about. I can move into more price action in discussion, but quite frankly, I think it is much better taught in a candlestick only book, which may seem like I'm kicking the can down the road answering that question. But I you know, I've posted Steve Kahn's book and I've posted a couple of the books on Telegram that are really very good or just going into Google and just typing in candlestick analysis and just watching basic videos about works. But the idea really is that in any group of candles, whether it be red or green, and I really don't like this color. I wish I could just change this color, but I haven't dug enough into how to change these damn colors here for the green. I think it should be more of a forest green in my opinion, but maybe one of you guys could tell me how to switch that. All you're really looking for in any group of candlestick patterns on daily, weekly, monthly, 240-minute charts is what's called an outlier, right? Things like an engulfer, where you see a particular move up. Okay, we don't really have any examples of an engulfer here, but it's a candle that, you know, covers the entire range of some period of time, maybe 2 or 3 days in the past. Not only goes higher than the range, but finishes lower than that range. It's what's called an engulfer. It's quite a bearish signal. The same thing could be said for the opposite side as a bullish engulfer, right? Or something like right here in this hammer reversal candle. See this? So we finished higher. See the wick here. Make this a little easier to see. So we finished higher here. I'm sorry. We opened up. We made a higher high, not a lower low, but we finished towards the bottom of the range. So essentially we had, it looks like an inverted hammer. It's typically a bearish signal. You tried to make a new high. Couldn't finish higher than the previous high, which is the tip of this wick right here, and you finished lower or in some range. Now, had this been a higher high on the next day, finished inside of range, notice that was bearish for a period of time, okay? Whereas nothing's really standing out too much here. And throughout all of this, you're also looking for those patterns I post in the Telegram channel. So are you looking for double tops or triple bottoms or, you know, some sort of inverted head and shoulders with a neckline it's going to break, so forth. But, you know, I would stick to the understanding of this first, as far as just the broad sense. And then you're just looking for stuff, you know. Eventually, the more you guys listen to me drone on Saturday morning, the more you're going to absorb this. If that makes sense. Let me rip through some of these questions here. I hope that answers your question, Peter. We could certainly delve into it a little deeper. I've been stuck in Euro AD since December 24th. Is there any hope this will turn around? So understand, Anonymous, why you're stuck in Euro AUD, right? So let's just go back. Where is that? Okay, so switch back to the daily. Okay, so here's probably here's about the 24th of December. So I'm not sure what software it is, but see how we have just continued to extend down below that period. So it's actually a pretty decent floor than when we broke it. Notice volume also picked up as well to the downside. It's telling you we're, you know, if we can get back to this level, it's probably going to serve as a resistance point in any movements up, especially with some of these lines almost perfectly lining up at that 6046 area. See that? We get back to an area like that and those trades have not closed themselves out or gone into a slight profit, I would probably manually close them. But notice we're also, from the standpoint of just the big picture here, let me switch to a weekly chart on this one. See how we're at a pretty solid support point from a more longer term perspective. So I would expect, only can expect in Forex, you can't foresee the future. I would expect us to start to snap back. You know, if we start to snap back, we get a bit little rubber bandized, is that a word down here, right? So it's going to want to snap back into this range. I'm more apt to close trades as we get back to some of those levels, in this case now, of resistance on the way back up. Even though you still may be in a loss, because more than likely drop back to the daily chart on this one here. Let's just expand this out. It's probably going to serve this whole 60-50-ish area is probably going to serve some pretty solid resistance at that level. That would be my advice. Can you put that chart in Telegram chart again? Are you talking about the Forex chart or the Forex picture, or you know how to scroll through Telegram, right? I don't need to repost stuff. If you go in here, I'll show you guys something here cool. So here is my channel. If you're not subscribed to this, I highly recommend. You can click on this. See this? See the files and the photos. You don't need to look at the photos, just my ugly face. But you can look at where is it? See how you can scroll through and find it. I don't know if you guys can see this. This was the reversal patterns one. And then there was another one that I posted that was really good. Where is it here? This is the Forex cheat sheet. Man, I tell you, I love this thing. This thing is actually something I got out of a textbook a long time ago. If you did nothing but study this, you'd pass most of your macroeconomics tests. So, it's crazy. Yeah, gold just had a cross, by the way, for somebody that just asked that question, just came in late. I'm not going to delve too far into that, but gold's really got to hold this point here. And a lot of it just has to do with big spec and what they call commitments of trader reports. A lot of hedge funds have been dumping gold, mostly just because they've been over levered in it. So we pulled back a little bit on that. Telegram link is in the back office, Nick. No analysis on Bitcoin at this point, other than I would not be a buyer up here. Could be wrong, right? I could always be wrong on Bitcoin. I called the last top at 20K. That was many years ago. I thought I said publicly on Twitter we probably wouldn't be back up there for some time. I don't have a good feeling it now. GBPJPY. So let's take a look at that. Don't really do much analysis on this one. Yeah, for the question that I got earlier, I was actually stuck at LAX on Tuesday. I couldn't get out of the damn airport to run the call. So we'll, you guys didn't really miss anything. All right, here we go. GBP/JPY. So we already know one thing coming into this, right? Got to really pay attention to what's going on with DXY first, right? Then you got to pay attention to what's going on GBP USD, right? So dollar, and then its relation to the pound before you can move into this JPY analysis. So here's just real quickly. Actually, let me drag this up real first. Right. So GBP/JPY on a dollar chart. So remember, we go DXY, main pin, GBP, second pin, JPY, probably third row pin. 142, resistance. Pretty good resistance before. So we probably, provided British pound pulls back, obviously, we probably could travel back down to this area somewhere near. Looks like your Market Watch channel is set to private. No, maybe somebody else can comment on that. I'm not the master of Telegram here. No, but I think anybody can follow the channel. Shouldn't be set to private. If anybody else wants to confirm that. All right. At what point does the U.S. debt start crushing the economy and turning us into Greece? I actually like that question. I should post that on Twitter as like a joke for all some of my buddies. Do I have your do I ever go ahead and post that on Twitter? It's actually a good question. It's funny. Keep coming. So this is a tough question to answer because honestly, guys, we're not Greece, is in debt as maybe and as poorly as we are viewed by some other countries for whatever reason, right? There's always haters. We are still looked at as the main currency of the planet and the place to be. Okay. So that's not necessarily my opinion. That is opinion of millions of people that have poured into this country for a variety of reasons. So at the end of the day, we have the ability, unlike a lot of countries, to print money, essentially just forming it out of thin air, as the Federal Reserve has done an excellent job of over the course of since 2008, right? So essentially when the printing presses started was the financial crisis. They can continue to print in perpetuity. But at some point, the level of debt that is serviceable by this country from an interest payment standpoint to all of our holders of debt is going to become crushing. When that hits the fan, which certainly could be soon, and we cannot make the interest payments, our rating on our government bonds are going to start to drop. And it is really going to ripple through the dollar, and it is going to force all of our policymakers in DC to get off their ass, start changing policy to reduce debt. Okay. It's that simple. I mean, this is like a Dave Ramsey 101 discussion of levels of debt, right? Dave's actually a really good guy. He's a big syndicated radio host guy. He talks all about, but I mean, his main theme is wipe out all debt, right? Have no mortgage, have no car payments, and then begin to pour money in everything in terms of retirement accounts and investing in others that I've talked about. It really is the same thing from a fiscal perspective and an economics from the standpoint of any government. And there's a lot of governments, not just the U.S., that's pretty buried in debt, and they need to climb out. So, and unfortunately, it's going to be some sort of black swan event that unfortunately is probably going to show itself for either the printing presses to be turned off and or the reduction of debt to be put in place. Now, the Keynesian economics will argue that you can take an economy and increase the GDP so much that you sort of grow your way out of debt. We've seen that happen a couple of times in the 90s, but it is not the way essentially to get out of debt. I have a very hard and fast opinion on how that all should play out, just because I do not believe in debt. But that's just me. I could be wrong. And I will post that question because I think it's great. Questions on anything else? We're coming up on 40 minutes of time. I can say we're moving. And actually, a good point that was brought up by Nick. Yeah, you guys could take a look at Daze's information if you want to do a deeper dive on that. But honestly, if you're going to be spending some time in Forex, I really would memorize that macroeconomic analysis piece that I posted, something like a cheat sheet. It's really good stuff from understanding just the interrelationships between GDP and everything from M1 to M3 money supply. What else do we want here? There's gold for the question that was asked. Guess we could probably look at the USD Bitcoin chart. What the heck did I do with it? Here it is. Let's just put this in perspective for all you lovers of the coinage. Let's take a look at a monthly chart of this thing. Okay. So coin action from 13 to now. Forget about the volume. Okay. Just look at the price action. This is a monthly chart. Note where we came from, right? Back up to the 20,000 level. I was publicly out there saying this is nuts. Take profits. Don't be chasing higher. I had a couple of friends that lost big chunks on this way down, and almost a full, over 70% correction from the high. Arguably, as you can see, this bounce here off of this level, this sort of 4,000-ish level on the coin. This was the buy point, plain and simple. Would I be a buyer down here? Yes. The problem is I sold the damn thing as soon as it started to lift into the 10,000. I figured 100% of my money is pretty good. Didn't invest that much in it. Took the money out and bought a car. So, and this was really no real fantastic insight on my part. It's just you could see very clearly on the chart we had a rejection, significant rejection with volume of the 4,000 level. Now we've gone into the stratosphere. Where's it going to go from here? I have no idea. Yeah, I know all the courses out there. Hey, there's a limited number of coins and the demand's going. I get it, but I would at least want to see some price action in terms of this thing moving back to some relation as we go into the dollar or as we go into the daily chart. If we even take a look at a 240 on this, which is a 4-hour, you can see where it's moving right now. Looking a little wedgy, quite frankly, bouncing off some of these. I just wouldn't be a buyer. Could be wrong, and a damn thing could go to 500,000. You know what? Just I want to buy it cheaper. It's really the bottom line. So I'll be picky. Could be wrong. Take a look at gold here. Looks like a couple of you guys asking for gold. Let's start with the daily first. So this represents about a 10% position in most of my clients' accounts via what's called the GLD. It's the Spiders Gold Trust ETF. Fairly decent and wicked liquid portion to own gold. You can also own it via the GDX, which is the VanEck vectors. Essentially, it's the miners. It's the ways, two ways to get exposure to gold, in my opinion, from an ETF perspective, which is just a tradable stock. So notice we're holding this area. Arguably, take a look at a weekly chart on it. Really, the point where I would start bailing is if we finished under 66. I would start bailing from it. Until then, we're holding. Could bounce up back towards the high, obviously, with continued move down in the dollar. Almost a perfect inverse correlation between these two right now. USD CHF. Let's take a look. Next request. Always start off with the daily chart first. And in this particular case, since we are dealing with one of the main first pin USD, and looking at the Swissy, we've had this, this looks just like a USD, or looks just like the DXY chart, right? So this point here, 8911 area has to hold. If we break through this, we're probably going to sail up to the first green EMA line, and I'd be less apt to accepting any short trades of this currency if we broke through this. Probably going to move up fairly quickly past this, but notice this line's been just holding solid. Do the same thing with the weekly. There's a lot less to see here. Buy the dip. I love that phrase. All the people that have gotten completely blown out of their investments by buying the dip. How about just sell the rip, right? What else do I want to talk about? GBP NZD. Yeah, everybody is crazy. This is like the wacko currency. Anything attached to the NZD, in my opinion. Blown out lots of accounts. Take a look at a weekly on this. Monthly. To tell you that this 85-ish area, it's almost 8,500 perfectly, has really been solid. Big, strong support right here. All right, what else I want to talk about? So, don't get too caught up in here. This is just the dollar. I should say gold dollar here. Don't get too caught up in these golden crosses. As you can see in this particular case, once we had this cross take place, right where this sort of starred line is, this is just an FX Blue chart. I just thought it's a pretty decent representation of crosses. Here's the cross right here. Higher time frame crosses sold off, right? And it crossed again, lifted up. But, it's not like, it was a short few days trade and the thing just came back down, which we've seen. This whole area for gold has primarily been just a deleveraging, if you will, from hedge funds and or big funds out there that were over levered in this metal. All right, so Telegram, chart patterns, Forex cheat sheet. What else am I missing? Those are the things, if I were you guys, I would study. One other thing I do want to point out before we go, to make sure everybody's crystal clear on this. So here is, find it. I'll be finishing my notes as well. Do keep in mind, you guys got to get the word out to anybody you know that's not really that plugged in on this whole VPS switch over and reboot. Okay, so make sure you go through this and reach out to those you think maybe aren't as plugged into Telegram or getting active notes from the back, or the email that was sent on this as well to all subscribers. You're gonna have to reboot and do a few other things here. I will leave it at that. Wish everybody a great trading week. Always tune into the Telegram channel. If there's anything breaking, we'll try and get it posted on for you. I wish everybody continued positive 2021. I am Steve Federal. Have a great weekend.